In the first week I increased my account from 1000 euros to 1384 euros. Now let's try to make even more. I think I didn't really do a great job with my trades in the last video. I mostly wasn't setting a stop loss and I was buying calls when we weren't even near a support, hoping that the market would stop falling and would bounce back up. So these two things are my main objective for this week. I'll set a stop loss on every single trade and I won't buy a put or a call unless we are near a support or resistance. So if the market is falling and getting close to a support, I'll buy a call and set a tight stop loss right below the support, and if the market is rising and getting close to a resistance, I'll buy a put and set a stop loss slightly above the resistance. As you can see, I haven't made a single trade since the last video, so we're starting with 1384 euros and 30 cents. I started my second week on Monday, December the 27th, and in the pre-market I followed the 180 SMA, the 15 EMA and the VWAP on the 5-minute chart represented a strong resistance. With all these indicators, I believed that the market was going to continue falling. So I wanted to buy a slightly out of the money put option, but the smallest position I could enter was too large for my account. So instead I shorted futures. I set a stop loss above the previous peak and a take profit slightly above the 180 SMA on the 15 minutes chart. With this trade I could lose around 6 euros and make around 20 euros. And the rule I like to stick by is to only enter trades on which I can make double the amount of what I could lose. And luckily around an hour later the trade got closed due to a take profit for a nice gain of 21 euros and 41 cents. And because the market was down by almost 1%, I decided to buy a call option with a striking price at $11,000 and set a tight stop loss and a take profit close to the SMA. Unluckily that position got closed due to a stop loss, bringing my total gain for the day to a staggering 4 euros and 79 cents. The next day in the pre-market, the market got close to the previous support, from which we have already bounced off a couple of times. So I bought a call option with a striking price at $11,000, and when I was trying to set a take profit, I realized that I can't accurately set a take profit on call options. For example, if I want to sell at the SMA on the Nasdaq futures chart, I can't correctly set a take profit on the options chart, and I would have to constantly monitor my position. But because I didn't have time to do that, I just set it to where the option was trading once the Nasdaq was close to the SMA. But all of that didn't matter because the position got closed due to a stop loss at market open, and that made me quite mad, because right after it got closed the market went straight up. So I decided that from now on I won't set a stop loss before the market open. Anyway, once the position got closed I opened another one and I was even in profit for some time. But then the market started dropping, and because I was still angry I didn't set a stop loss. On Wednesday I bought two more call options, the first one with a striking price at $10,900 and the second one with a striking price at $11,000, which I bought just before the market closed, and I proudly didn't set a stop loss on either of them. Shortly after the market opened on Thursday, it was already up by almost 1.7%, and because the market got extremely close to the 180 SMA on the 30 minutes chart, from which the market bounced back down a couple of times, I sold my call options, which brought my total gain for this week up to 77 euros and 22 cents. And because I strongly believe that when the market goes up by a lot in the first couple of minutes after the bell, it usually pulls back down, I started shorting the futures. I set a stop loss slightly above the peak and a take profit close to the SMA. And despite my strong beliefs, the market continued going up and it closed my position for a small loss. On the last trading day of 2022, I bought a put option with a striking price at $11,000 because the market rallied up to the SMA on the 5 minutes chart and I was expecting it to fall. Surprisingly, that actually happened, but then the market jumped back up to the SMA and I immediately started shorting the futures and set a stop loss above the SMA on the 5 minutes chart and a take profit slightly above the SMA on the 15 minutes chart, which meant I could lose around 3 euros or make around 30 euros. After a couple of minutes I closed the put option for a small profit and let my short ride until it hit the take profit, bringing my total gain for the second week to 102 euros and 45 cents. On the first trading day of 2023 I bought a call option around an hour after the market opened. Because the market was up by 1% before the bell, then it started falling, and once it looked like it was turning around I jumped in. I didn't set a stop loss because I wanted to manually close the position, however I did set a take profit slightly above the SMA. After around an hour I checked the market only to find out it actually rose to the EMA, and then then fell even lower. So I decided to do the only thing I could do and bought more call options. And what do you think happened next? The market dropped even more, so I bought twice the amount of options I've previously bought. The next day the market rallied by around 0.5% in the pre-market, and that turned my call options in profit. I immediately sold all of them to lock in a huge profit of 162.44 euros. Later in the day, around 3 hours before the market closes and 1 hour before the FOMC minutes, I bought a straddle, which means buying one call option and one put option with a striking price close to the actual price of the asset. With this strategy I make money if the market moves up or down by a certain amount, and I lose money if the market stays flat. And in my case the market would have to go up or down by 5% or more. After the FOMC minutes came out, the market dropped to previous lows and I sold my put option from that straddle for a nice profit. And right after that I bought one more call option, which I sold shortly after for an extremely small profit. On Thursday in the pre-market the market was already going up and I was thinking about selling my call option from the straddle, but I decided against it. And I guess it's only natural that the market dropped right after, and once it dropped to the previous low I bought another call option, but then at market open it dropped even more. And I think you already know what I did next. Of course I bought another call option, the reasoning behind it being that the market tends to overreact, and later in the day I even bought another call option. On Friday, an hour before the jobs report came out, I even bought one more call option, and after the jobs report the market went almost straight up, so I sold it for a nice profit. Then the market dropped almost straight down and I bought a couple of futures, which I sold when the market bounced back up to the EMA, because I believed it to be a possible resistance. But to my surprise the market continued rallying, so I gradually closed all of my call options as the market went even further up. In perfect hindsight I should have held them until the end of the day, as I would have made a lot more money. I also opened two shorts when the market showed signs of a pullback. I set a tight stop loss which resulted in both of my shorts getting closed. So these two losses were in my opinion completely unnecessary and another example of me overtrading. On the last Monday of this trading challenge the market went up around 2% and I opened a straddle for the upcoming CPI report. I know I originally wanted to open it a day before the CPI report, but because the daily chart gave me an idea, I decided to open it on Monday. I thought that the market was going to rally into the CPI report and it was going to get really close to the SMA. Once the CPI report would get released, the market would either tank back down or skyrocket up. So my plan was to buy a straddle now and set a tight stop loss on the call option an hour before the CPI report gets released. So if the market actually dropped, I would lock in profits on the call option, and once my put got in profit I could also sell the put option. Besides opening this straddle I also started shorting the futures, and once again I set a tight stop loss above the previous peak and a take profit and the VWAP. Shortly after opening the first short I opened another one, and unfortunately both of them got closed due to a stop loss. But because I still believed the market was going to pull back, I opened another short, doubling the amount of my previous positions. Once again I set a take profit and the VWAP, but this time I didn't set a stop loss. A couple of hours later I manually closed the position for a nice profit of 64.08 euros. Although if I let it hit the take profit I could have made an extra 10 euros. On Tuesday I realized that my amazing plan for the straddle wasn't even great. If anything it was quite bad, because even if I set a tight stop loss and the market goes down by a lot, my stop loss wouldn't close the position at the price I set it, but at the next available price, meaning that if the option starts trading way below my stop loss, my position gets closed at a loss. And to make things worse, after the CPI report got released on Thursday, the market didn't even drop straight down or go straight up. It went up and down and stayed pretty much at the same level. At one of those bounces I bought a put option which I sold shortly after for a small profit. On the last day the market dropped by quite a bit in the pre-market, so I decided to buy some futures. I set a tight stop loss below the previous low, but a couple of minutes before the market opened I removed my stop loss. The market went up, and once it started falling back down I set my stop loss slightly below the VWAP. Well, it got triggered and that trade made me 30.65 euros, bringing my total gain for this trading challenge to 841.27 euros. So in about a month of me trading I somehow increased my account by 84% and 66% of my trade trades were profitable, so 2 in 3 trades made me money. I am aware that if I traded with real money, the result would be very different. But before I actually start trading with real money, I want to get this account to 10,000 euros. Having all that said, my straddle is currently down by quite a lot and it could lose me a lot of money. So once I close it, I'll update you guys in the comments. If you want me to continue uploading my progress, let me know by smashing that like button. And you should definitely watch this video next, and thanks for watching.